Here to dive into industry trends with leading ETF experts, this is ETF Spotlight with Neena Mishra.
Hello and welcome to ETF Spotlight. I'm your host, Neena Mishra. My guest today is Claire Smith, CEO and co-founder of Beyond Investing. Beyond Investing is a vegan and cruelty-free investment platform. They launched the world's first vegan-friendly and climate-conscious ETF this week. It's called the U.S. Vegan Climate ETF with the ticker symbol VEGN, VEGN. Claire, welcome and thanks for joining us.
Thank you very much, Neena. It's a pleasure to be here.
Okay, please tell us a little bit about your background and about Beyond Investing and why you decided to launch the ETF.
Okay. Well, in terms of my career, my background is in the finance and investment field. I've been working at either investment banks or investment firms since, in fact, the mid-1980s. And so that's my experience from a career standpoint, my professional experience. But in terms of my private life, I've always been concerned about environmental issues, and in fact, first-term vegetarian when I was 15, and then vegan about 20 years after that. So my entire adult life has been spent, being conscious of the situation of animals in our society, and it's something that I've grown increasingly concerned about for two reasons. One is that the extent of factory farming over that period has only grown more prevalent. Monoculture agriculture, which is designed to support factory farming of animals through growing things like soy and corn, has got worse and worse. It's become more and more the case. And in addition, we're now very conscious of the fact that climate change is upon us. Whereas when I started being vegetarian, climate change seemed to be a very distant thing in the future. Whereas now I think we're all feeling the effects of it, and it's come to my notice over the last 10 to 15 years the importance that animal agriculture has in that. Hence, I felt that it was important to that people should be aware of this, and that they should also be investing according to their values and to the concerns that they have about the environment. I was unable to do it myself when I took over my pension fund, which I had taken over from my career in banking in the 1990s. I found that there were no products that I could invest in that really took seriously my concerns. And so that's when I decided that it might be a good idea to create such a product. And eventually I did get around to doing it, and was started working on this in 2017 when I left my previous firm, joined with my business partner Larry Abel, who's also an environmentalist who lives a vegan lifestyle, as well as Lee Coates, who created the Cruelty-Free Super in Australia, which is a cruelty-free pension fund available for the Australian market. And together, we've put it together over the last 2 years and launched it this week.
Excellent. And you mentioned that you are a vegan, and we have seen rising interest in veganism. In fact, I saw a recent report from Global Data which said that the number of U.S. consumers identifying as vegan grew 600% over a recent 3-year period. So could you tell us a little bit about how plant-based diet can help the environment?
Well, the primary reason that a plant-based diet can help the environment is that if you're eating plant-based, you are directly eating plants as opposed to putting plants through the rather inefficient system that an animal is for creating food. If you are feeding an animal food, they are consuming far more food than they're creating. This is not being disparaging about the animals. They didn't ask to be put in that position. But essentially, you're putting a lot more plant matter, calories, protein into the animal than they're actually yielding. And the conversion ratio can be, as high as into the 20s, 30s, 40s for an animal like a cow, slightly less for a pig, a little bit less further than even less than that for a chicken, but still a multiple of times of the amount of food that they're actually eating. So it's necessarily more efficient for humans to eat plant food than to feed that food to animals. But there are other reasons why it's a very bad idea. One thing is the use of water. In order to create the plants, in order to feed those plants to animals, there has to be an enormous amount of irrigation, and then the animals themselves need to drink water. So you're using thousands of gallons of water in order to create a beef burger if you do that full life cycle analysis. In addition to the fact that animals also produce waste, literally lagoons full of it. If you go into certain states in the U.S. where there's lots of pig farms, you'll see these lagoons full of pig waste, and there's nothing that can be done about them. They're actually sprayed into the atmosphere, and there's been some lawsuits recently by communities that live near these pig farms because of the unpleasant impact that it has on their environment and their ability to breathe. So it's an incredibly dirty industry in that sense. Also, fishing. We haven't mentioned fishing so much, but if you are adopting a plant-based diet, then you're not consuming fish. And we know that the oceans are being depleted of fish. We also know that fish farming is incredibly unhealthy for the animals and also creates pollution into the environment. In fishing, much more fish is caught as bycatch than is actually consumed by humans. And a lot of that bycatch is things that are not intended to be caught, like dolphins, sharks, turtles, etc. We have some 80% of antibiotics used in the U.S. being fed to livestock, not fed to humans. And we know that antibiotic resistance is facing us in the coming years because so many of the diseases that we've got used to treating with antibiotics, the diseases are mutating in such a way that the antibiotics are not working anymore. So, I could go on. Clearly, I could go on. There are many ways in which animal agriculture is very damaging, and by eating plant-based, you're avoiding all of those impacts.
No, very, very interesting points. So let's talk about your ETF. So some may think that this ETF, as the name suggests, vegan, it invests in companies that make vegan products, but it is actually an ethical investment fund which is designed for animal advocates and environmentalists. So tell us about the index that it tracks. How does it select the companies and how does it weight those companies?
Yes, what we've basically drawn from is the appropriate, the definition of veganism. People will understand vegan products now within the consumer market as being, these are special products which are created for vegans or created in order that other people can eat vegan if they want to eat vegan. But this is actually quite a recent thing. And in fact, a lot of these vegan products which have been created recently are being eaten by many other people than vegans. Veganism is really a lifestyle and a practice which is a way of living, according to the Vegan Society's definition, that seeks to exclude as far as is possible and practicable all forms of exploitation of and cruelty to animals for food, clothing, or any other purpose. So this is what we've enshrined in our index, in fact, and it's informing our guidelines as to which companies we permit to go into the index and which companies we exclude. So our exclusions are mainly around those aspects of the of exploitation of animals, which is not just about animal products. Everybody thinks veganism is just about eating differently. It's about all types of products that come from animals. So we would include, obviously, different types of clothing products. We also think about exploitation of animals from the perspective of animal testing. So companies whose products are tested on animals, so these are inherently dangerous products in some ways, are also excluded from our index. And that actually has some quite interesting sort of environmental and pollution benefits as well in terms of the index. Other forms of animal exploitation, which may not be quite so evident to people, we're avoiding the exploitation of animals in sport and entertainment as well. We, as a vegan, we do not think that animals necessarily can be owned or used in any way, shape, or form. And so something like horse racing, for example, would also be excluded from our index. Now, I wanted to bring in the climate aspect of the index as well. We've called it the Vegan Climate Index, sure. and some people ask why we're putting the climate angle into it as well. Now, one thing I didn't reference when I was talking about animal agriculture was the climate impact. Mm-hmm. And the animal agriculture does have a climate impact directly through the animals being out in the field or in the factory farming operations and eating products, eating plant food, which they are then creating gas. And everybody's talked about the whole methane thing, but that is something that is actually material. The animal agriculture industry also consumes a certain amount of fossil fuel, and so it creates fossil fuel through its operations. But another aspect is its impact on land use. And because the animals are eating so much grain and so much soy, it's causing deforestation. And that deforestation is causing us to lose carbon sinks in the Amazon and in other forests where land is being taken up for either the production of this food or grazing of the animals. And so the climate impact is embedded within the vegan philosophy. By being vegan, you actually do help the climate. Mm-hmm. And by investing vegan, we feel that you help the climate in terms of your portfolio having a lower carbon footprint. Now, taking that into consideration, we also felt that it was important to exclude fossil fuels. Many people are already excluding fossil fuels, right. And the high use of fossil fuels for electricity generation in their portfolios, and we felt that it didn't make any sense to be vegan, concerned about the environment, and still keep fossil fuels within the portfolio. So we've combined those two themes together within the index by excluding fossil fuels and utilities that are using a lot of fossil fuels in their electricity generation in order to further reduce the carbon impact of our index. So we actually get down to about 40% only of the broad market carbon footprint. We're reducing the carbon footprint by 60%.
So I'm looking at the top holdings, Apple, Microsoft, Facebook, AT&T, and Intel. And if I compare the top 10 holdings, say, with the S&P 500 ETF, I see some notable exceptions. Amazon is not there. Berkshire Hathaway is not there. And ExxonMobil is not there. Exxon is obviously clear, being fossil fuel. So can you talk a little bit about some of these exclusions and why they have been excluded from the index?
So actually, just looking through the 35 top stocks in the S&P 500, we actually exclude 20 of them. And they are 20% of the index. Mm-hmm. So some of these large cap exclusions are some of the biggest differences between our index and the S&P 500 index. Mm-hmm. And you've mentioned some of them. Amazon, they bought Whole Foods a year or so ago. Right. And Whole Foods obviously does have meat on its shelves if you go into a Whole Foods market. And so as a function of that, it would also have eggs, dairy as well. As a function of that, we've excluded it from the indexes for its direct involvement in the sale of animal products. We don't have J.P. Morgan Chase. That's another exclusion. That's actually because of its large support for fossil fuel production. And we've done analysis on the banking sector, and we've excluded some half a dozen of the largest banks where we found that their provision of loans and other support to the fossil fuel companies is higher than average, and it is not decreasing. And so as a function of that, we have taken out some of those large banks. Johnson & Johnson is another large exclusion. That would be primarily because of animal testing of their products. ExxonMobil, you mentioned, of course, that's fossil fuel. Procter & Gamble, that would primarily be animal testing and some animal products in some of their products. Berkshire Hathaway, they have a large position in Kraft Heinz, which is obviously a big food producer in the U.S., which does include animal products within its food. Home Depot is another one. They have animal products on their shelves, and some of their products, particularly paints, etc., would be tested on animals. Does that give you a good flavor? That's just a handful of stocks from the top of the S&P, but it's covered quite a number of our different exclusions.
Sure. So could you also tell us about some of the companies that you like for being environment and animal friendly and that you have included in the index?
Well, the index primarily is based on the top 500 stocks, and as long as the companies are not involved in any of the business activities that we are seeking to exclude, then we will let that stock in. However, we are proactively seeking to add in index from the mid-cap sector certain stocks which, if they were large enough, would fit into our index. So, sorry, that's a bit complicated, but basically what we're trying to do is to look within the mid-cap for stocks that are in the same sectors as the stocks that we're primarily excluding from the S&P 500. So let's say in the energy sector, if we could find a stock in the mid-cap which was more oriented towards renewables, for example. If we could find a stock in the mid-cap which was a plant-based food company. And so guess what? We have Beyond Meat in our index. It's in a small weighting because it's still a mid-cap stock. So we are, governed by the standard rules around indexes, which is that you put most of your money into larger stocks and you generally weight towards market cap weightings. But it is in our index, whereas obviously it's not in the S&P 500 yet. Another stock which we have is Tesla, which obviously is in the renewables space, being a car manufacturer using electricity rather than petrol. And also it's been somewhat sort of vegan friendly in terms of its attitudes to its interiors. Another stock which I'm just looking at is a utilities company. We are taking out some of the utilities, as I mentioned, because of their excessive use still of fossil fuel for their energy production. And we found a company in Hawaii called Hawaiian Electric Industries, which we've added proactively into our index. It's not in the S&P 500 because it's mostly in geothermal and renewable energies. So this is the kind of tilting that we are trying to do. We're obviously only able to do it to the extent that those stocks actually exist.
Right.
But we would love to see more renewable stocks and more plant-based stocks, more stocks that are falling within the categories like, let's say, cruelty-free cosmetics. As soon as they get into the mid-cap area, so that would be around sort of 4 or 5 billion and upwards, then we'll be more than happy to put them into our index.
Okay. So you mentioned Beyond Meat. It is one of the hottest IPOs of this year. And its competitor, Impossible Food, is not yet public. But there is obviously a lot of demand for plant-based meats. So probably we'll see more companies and more companies go public. So should we expect to see more companies like Beyond Meat in the portfolio going forward?
Definitely. Yes. We're looking forward to seeing those companies come onto the exchange. We do hope that they IPO as opposed to getting bought out by a larger competitor. We would be very pleased to see them IPO and to then provide people within the vegan community for the opportunity to buy them directly as well as buying them through our index. We know, in particular, I know there's been a lot of market commentary about the pricing of Beyond Meat versus the pricing of other food stocks. But I think that really only goes to show where people see the growth potential, and also that some of the other food stocks that are more oriented towards meat are possibly ex-growth, and that their prospects are not so good.
Yeah, obviously there's a lot of demand for plant-based alternatives. That is why the stock has surged. In fact, I read a report that the market for meat substitutes is expected to reach $2.5 billion by 2023, and that's according to Euromonitor estimates. And but while there is no disagreement that whole foods like vegetables, fruits, nuts, legumes, they are very healthy, some health experts have raised concerns about these meatless products that are designed to taste like meat because they are highly processed. They have more sodium and they are sometimes also high in saturated fat. So what are your thoughts? Do you think these plant-based alternatives are good for the environment but not so good for the health? What's your take?
My take is that there's often a transition that needs to be made. And I think if you took the overall effect of these plant-based products on people's health, given that they are not consuming animal flesh, which has been associated with 15 of the main causes of premature death. If you actually take that into consideration and then kind of put it on a sort of level playing field, I think that there is still a health advantage to eating those products in order to avoid some of those really really serious health problems that people do get from eating meat. Meat obviously does contain an enormous amount of saturated fat. That's one of the reasons that people are looking to switch away from meat. So I think you have to compare the two with each other, and also realize that in order for people to transition, they need to be given something. Sometimes they need to be given something that they're used to. I always say nobody goes from a well-done steak or a rare steak to eating lentil curry or and rice, let's say. Often people maybe are interested in plant-based eating, but they don't know where to go. They don't know how to do it. They don't necessarily want to, figure out what they do with, pulses, have to start soaking lentils overnight, things like that. That can be very off-putting to people. I think it's nice for people to have something which they know how to deal with and to be able to make the kind of foods that they're used to making and that they can very readily replace in the recipes that they're used to making. I know the people who run Beyond Meat, and they're conscious of that they can improve their recipes, and they're certainly working on it. I also know other companies, some of which I've invested in personally, and they are producing recipes which are stacking up on all types of nutritional content. So they're managing to avoid some of these issues of the fat and the sodium by using different ingredients. So I think we have to see this as a progression, as a means of getting people off their addiction to meat or their reliance on meat within their diet, and that over time they will transition more towards a healthier style of eating.
Okay, makes sense. And now your product comes with an expense ratio of 60 basis points, and which seems a little bit pricey. We have seen a lot of interest in ESG themes of late, but now there are ESG ETFs available to investors with charges 10 basis points. So tell us why investors should consider a niche product like this, which is pricey, compared to other broad ETFs. Do you think this product would appeal mainly to animal-loving investors or other ESG-conscious investors too?
Well, I think that we are achieving some fairly compelling metrics from the perspective of, as I said, carbon, waste, and water, so that if you are concerned about the environment, our metrics are so much better than any other ESG fund that we have looked at, and we're using some pretty heavy-duty data in order to assess our portfolio against other ESG funds, which we feel are really not going far enough. Actually, one press article the other day called us hardcore ESG, and I actually took that as something of a compliment.
Yes.
Because I think it is necessary. I think we're at a state, in our society and with the environmental problems and climate change that we're facing, that we do need to get a little bit more hardcore, and we do need to go a bit further than just a little bit of tinkering around the edges. So I think we have put a construct together. I would say that in terms of the policies that we've put together, nobody has ever tried to do this before. We've had to do all of this work from scratch. And also we're a boutique firm who are creating this ETF. And so we do obviously have quite a number of expenses to pay for in order to get it off the ground.
Sure.
Hence the fees as they are. But believe you me, as soon as we get up to 50, 100 million, we will be bringing those expense ratios down, because we appreciate the support of people within the animal and environmental community. We're not looking to make ourselves fabulously rich by doing this. We're looking to provide them with the opportunity to invest according to their values, to have an impact on the market price also of these companies, in order that they feel, let's say, more encouraged to change their practices. To preferentially invest in companies that are not damaging the environment, that are not hurting animals, and to give those companies which are something to think about. So we're keen to see as much capital move into this as possible, and we will be bringing the fees down as soon as we see that happen.
That's very good to know, and it's definitely a very unique product. So I hope it reaches that level of 50 million or 100 million soon, so that you can bring the fees down. Anything else investors need to know about vegan and cruelty-free and environment-friendly investing?
Well, the only thing that really occurs to me is that it's important that investors take into account the risks that they are taking by investing in some of the companies which we're excluding. The UN PRI conference was this week. It took place in Paris, and the president of the UN PRI actually made this point in a speech to the conference, that investors needed to be conscious of the fact that the longer corporates went on doing these environmentally damaging practices, the more likely it was that governments were going to have to take action, and that they would change regulation, or they would impose taxes, that they would try and price in externalities like the price of carbon, in order that companies were forced, in a way, to change what they were doing. Now, that clearly is a risk to those companies' businesses, and it's very obvious, potentially, it's very obvious to us which companies are likely to be most at risk, which will have stranded assets. I see there to be stranded assets within the fossil fuel area, but also within the area of animal agriculture. I really don't know who wants to do anything with, let's say, a concentrated animal feeding operation, which is in the middle of nowhere, which has been polluted over years and years by having thousands and thousands of animals living there. I can't see that there is a value to those kind of operations if people stop eating meat or reduce their interest in meat, either through their own volition, or because governments put in place meat taxes, or they reduce subsidies. So there are some really quite major risks to investors. And I would also point out the very, very good work done by the FAIR organization, that's called Farm Animal Investment Risk and Return, which is a London-based foundation that has done a lot of analysis on the climate impact of animal agriculture and what animal agriculture is doing, or rather is not doing, in order to address their impacts. So there are some pretty major risks in these areas. And by investing in the vegan climate ETF, investors can avoid taking those risks. And that could lead to some positive performance if companies do not act and are forced to act by governments, but maybe they won't be able to act quickly enough and are left with these stranded assets.
Right. Excellent points. So that's all we have time for today. Claire, thanks again for joining us.
It's been a great pleasure. Thank you very much for your questions.
Thanks for listening. If you want to learn more about this ETF, please visit veganetf.com. Make sure to be on the lookout for the next edition of ETF Spotlight, and also make sure to subscribe. If you have any comments or questions, please email podcast@sachs.com.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.